This is Gerardo Del Real with the Outsider Club. Joining me today is the mercenary geologist, Mr. Mickey Fulp, and Outsider Club founder, Mr. Nick Hodge. Gentlemen, thank you for taking time today.
Thanks a lot, Gerardo.
We're here at the Beaver Creek Precious Metals Summit. I'd love your take, Mickey. Nick and I spoke a bit earlier, but you and I haven't had a chance to catch up. What are you seeing? What's the energy like? What's new?
There's a lot of people here and a lot of companies here. The numbers I've heard, and I don't know, is 160 companies and 1,100 people.
I heard record attendance.
So that's certainly record attendance. There's so many companies, they had to put a couple of tents outside to hold all the meetings. So I think the mood here is much more subtle and subdued than it has been over the last couple of years. And I would attribute that to the fact that when we were here the last 2 years, gold had hit its yearly high, or was at its yearly high, right around $1,350, and now we have a $1,200 gold price. This is a precious metals summit, and it's overwhelmingly focused toward gold. So there's a lot of money floating around. I don't see a lot of deals being made at this stage, at this conference. And I think last year there was a lot more deal flow.
Let me ask you this. Do you think that the robust attendance is a precursor to M&A?
Well, it could be. You know, I've noticed a lot of mid-tier and major mining company guys floating around. And from my end, that's geologists. You know, I'm standing in the middle of a half a dozen Newmonters yesterday. Most of who I know because I worked for Newmont for a short period of my career. So yeah, the mining companies are looking, and that makes sense because we're just not finding enough giant gold deposits. You know, I'd argue that the idea of peak gold is probably fake news, but what is not fake news within that? They're not a large, attractive, giant deposits for the majors.
Nick, you've been here for the last couple of days vetting new ideas. You had the good fortune through your hard work of interviewing Mr. Rob McEwen. Mm-hmm. What are you seeing as the emerging themes from this conference? Things that have stood out to you?
I think I've heard it's a tough market from every single person I've talked to. And so it's a tough market. I mean, look at the GDX, look at the GDXJ, look at the gold price over the year. It's been more than subdued, I think was the word that Mickey used. It's been abysmal. The bright thing is that there's some excitement with new high-grade discoveries, right? We've seen them been rewarded in the market for high-grade discoveries in the Yukon. And you can sort of, I don't want to say feel it bottoming, but like you said, Newmonters around, mid-tier guys sniffing. There was literally a guy walking around here with a target on his back. I don't know if you guys saw that. So... Yeah, and we've seen some deals announced recently, and so I think, like Mickey says, the juniors with the high quality assets they're gonna start to go. And when I say go, I don't necessarily mean the share price. I mean go bye-bye.
Mm-hmm. Mickey, the last time you and I spoke,
as opposed to what I've been seeing over the last 6 or 8 months, which is majors taking equity positions in juniors. Now what you think we're going to see is some actual M&A coming out of that. No, and we have had some, but you expect that to accelerate.
I do, and I think that they were testing the water, right? I think they're putting a little toe in, maybe just continuing their due diligence and sort of maybe waiting to see if there's going to be a 2018 catalyst for the gold price. And regardless of that, in 2019, I think you'll see some more deals.
Okay.
Let's talk about why some of the M&A hasn't materialized. The bottom line is that a lot of the producers have been hit hard this year, and they frankly don't have balance sheets that will allow a board to justify an acquisition. Now, one of the major themes thus far this year at this conference has been the clean balance sheets of Australian miners. And so do you think that will accelerate some of the M&A space here in the U.S.? We've seen some moves recently. Mickey?
Well, your point's well taken there, because I've noticed a lot of Australians float, a lot of funky accents. And those guys you say, speak English so I can understand what you say. Or better yet, speak to me in Spanish so I can understand what you say. But that could be.
One of the interesting points I heard about the Australian miners is that there's been so much weed money floating around in North America that's not floating around in Australia. So all things being not equal, I guess, with the weed money in North America, Australian miners have 30 to 40% greater valuations at this point because capital hasn't been detracted from them.
And certainly the weed and to a certain extent in the early part of the year, the cryptocurrency bubbles, and I still are calling them bubbles, and that's played out in cryptos, perhaps not played out to that degree with weed stocks, but it's sucking a lot of venture capital away from the gold business. And perhaps all we need is a robust gold price.
And at the same time, though, I'm getting some emails from longtime mining folks who are doing weed deals or crypto deals, and so to me, that's also that's a contrarian sign, right? It's if this is your lifeblood and you're sort of looking outside that because the sector is so abysmal right now. Well, to me, that's a true contrarian sign.
Yeah, so abysmal sectors gives us buying opportunities.
That's exactly right.
I've been saying that for 2 days. All the feedback I've received is, man, this is a tough market. Man, this is ugly. And it's a good time to buy. It's a horrible time to sell, but it's a cyclical space, right? And you have to understand the cyclicality of it if you're going to make money in this space.
Yep, and you want to be a contrarian. And guys, we're the end of September basically right now, and so you'll see people start to front run tax loss selling here starting in the next month or so. So some of these things that are at bargain prices we think right now are going to go lower and become even more bargains. So you kind of, if you like a story, you buy some now. If it goes lower, you add on, reduce your cost basis with stink bids.
2 points to that. Hopefully you've kept some dry powder is the first thing. Man, I'm losing the second thing right now. It'll come back to me in a second. Oh, it'll be that you've got to stay in right now. You've got to either own the names or continue to buy the names, because if you miss the turn, that's when the disproportionate amount of gains come. But we all know that to be true. And so when either the gold price turns or there's some catalyst that sends shares higher, you need to be in for that first move, because that's when the bulk of the gains come. And so you can't really throw in the towel and sell your shares. I've also been hearing from a couple brokers at this conference that clients of theirs have been calling them up and saying, I'm out of North American resource stocks, put it in whatever.
You mentioned, Nick, having to be positioned, and you called the bottom in the uranium space. You joked that you've been calling the bottom for 3 years, but you called the bottom in 2000.
Jeez, is that all? I've been calling it for 5.
However, you have a pick that's doubled in share price.
What was the question?
You had a pick in the uranium space that's doubled in share price. Many of the other juniors are up 20, 30, 40%, but that's just the beginning. Do you see that as a trend that's going to continue in the uranium space? Yeah,
I do. Look, I'm bullish on uranium. I've been given plenty of interviews and written plenty of reports and thousands of words in my weekly updates about uranium and why I think we're on the cusp of a bull market and why it can't go to zero, because it's responsible for 20% of the baseload power in the United States. And so, it's going to go higher. I don't know exactly when, but you do need to stay in. You need to own the quality assets, as I've been preaching. I think it's going to go higher because it has to. And to your point that I picked a stock that doubled this year, that was Energy Fuels. They're the largest U.S. uranium producer, which isn't saying much because we only produce about 3% of our domestic needs. But as I've also said and put in print several times before, the uranium companies doubling their market caps now still means they're down 75 to 80% since Fukushima, and so they're quite cheap.
A lot of runway there. Excellent. Let's switch topics and talk copper. A lot of M&A lately in the copper space.
There has been.
Companies publicly stating that they have billions of dollars and they're looking for assets, all the way from producing companies down to the exploration side of it. Do you see that picking up, Mickey?
Oh, absolutely. I own a particular copper company, Trilogy Metals. We picked that last year at 65 cents. It's gone above $2 at a couple of weeks ago. It seems somewhat immune to a downturn in copper price. Copper got down to 265 or something here 2 or 3 weeks ago. It's at 283 today. So those quality assets in the copper space, I'm really convinced you need high grade.
That's correct.
You don't want to be picking companies that have low grade porphyries. They may get taken out at some point because there's nothing left. But for me, it's focusing on the good high-grade stories that are progressing toward feasibility studies or resource estimates, et cetera. So I'm quite bullish on copper.
Are we going to see an increase in exploration spending, Mickey?
In copper space? Well, we need a $3.30 copper price, and we had that in mid-June. and it's come off since there for a variety of reasons, not all because of Trump tariff talk, but certainly the base metal space has been affected by that. But some weakening of the Chinese economy. What's really hit the copper space, which is unusual, there's been absolutely no supply disruption this year, and usually all the analysts bake in -4% for disruption in copper supplies for strikes or weather or accidents or whatever. Weakening Chinese demand, or economy, not really demand, weakening Chinese economy. So it's all kind of hit the copper space all of a sudden. But at 270 copper, the highest quartile, maybe 25% of copper producers in the world are underwater, which means the price got to go up. So gets up that $3 range, then the upside looks in sight, if you will.
Nick, you coined the term the electrification of everything, a term that I've used several times in my pieces. Do you think that's a trend that continues or accelerates?
Did I do that?
You did.
Yeah, no, it has to. Look, we've all got devices in our pockets, if not multiple devices. Apple just came out with a new iWatch that monitors your baseline body functions, heart rate, and things like that. And just today, a major insurance company came out and said that they're selling life insurance policies based on those devices. Phones, cars. Let's talk about the electric vehicles, right? I mean, there's companies like Volvo that are going to 100% electric vehicles in the next short while, and so ton of copper in every single electric car. It's got to come out of the ground.
Mickey, thoughts?
Well, there's 85 million more people on the planet every year, and they want to be able to have what we have. Absolutely. Most of those population growth to a great extent is in Southeast Asia. Or Eastern Asia, let's say, and Sub-Saharan Africa. 25% of the people in the world can't turn a light switch. They go to bed when it gets dark, and they get up in the morning when it gets light, and that's changing, especially in Eastern Asia. Year after year after year, since 1900, copper demand worldwide has increased annually, year over year, 3.4%. We're using more copper than we ever have, and next year we'll use even more. So we need to find some good copper deposits.
I think the three of us consider ourselves contrarians. We live in different places. I'm based out of Austin, Texas. You're based out of Spokane, Washington, and I believe you're based out of New Mexico, right, Mickey?
That's right.
Geopolitical uncertainty is pretty rampant right now. How much of an effect do you think that's going to have in the resource space? Do you think these trade wars are sustainable?
No, they're not sustainable. I don't think we're having trade wars. I think we're having trade discussions. We're having a reordering of the trade paradigm in the world, driven mainly by Trump and the bully pulpit. But we're not going to abandon our friends to the north in Canada. We've already made a deal with Mexico. In my opinion, we remain the 800-pound gorilla on the block with world trade, and you've seen that with what the Chinese are softening their attitudes. So maybe I'm just an eternal optimist, but I think a lot of this trade stuff gives speculators an ability to move markets up and down, commodity markets, and make money. No one wants a flat market. We need volatility in the market to make money.
Absolutely. Nick, are you as optimistic?
Look, I think there's geopolitical uncertainty. I think if we're talking specifically about the gold price, though, it's going to have more to do with interest rates and the economy than geopolitics. We haven't seen, at least I haven't seen, geopolitics move markets like they traditionally have in the past. If an Iran headline moving oil or gold or whatever it is, things in Turkey that just happened didn't drive the gold price. And so I don't think it's geopolitics. I think it's dominoes falling in the global order of the economy.
And you think that'll help the resource space?
The gold space for sure, and rising tides.
It's a great way to end it, everybody. Rising tides.
This is really dependent on the U.S. dollar right now, gold price. As the dollar goes up or down, the price of gold does vice versa. So,
excellent. Gentlemen, thank you for your time. Appreciate it.
All right, thank you.
Thank you.